Hello everyone, welcome back to Stock Market Meridian. Today is 18th August 2026 and you are watching today's pre-market report. Let's begin with the global markets. Starting with the US markets, yesterday all major indices literally crashed and at present US index futures are also trading in the negative zone. Moving to the European markets, only the FTSE 100 closed with a neutral bias, while the remaining major indices ended the session in strong negative territory. Now, looking at the Asian markets, Japan, China and South Korea are all trading sharply in the negative zone. So overall, global markets are indicating a strong negative sentiment for today's session. And specifically, there are some interesting updates related to AI chip companies and the South Korean market. The massive demand for AI memory chips has pushed Samsung Electronics and SK Hynix into the $1 trillion valuation club. The AI boom has also created massive wealth for semiconductor employees in South Korea, with reports suggesting average bonuses could reach around $4 lakh at Samsung and nearly $5 lakh at SK Hynix. But while the AI boom is creating huge opportunities, concerns about overvaluation are also increasing. The European Central Bank has warned about the risk of a major market correction, comparing today's AI rally with previous technology bubbles like the dot-com boom. The ECB highlighted stretched technology valuations, massive AI infrastructure spending, and increasing corporate debt as key risks. Investor Michael Burry has also raised concerns, saying some market indicators resemble the setup seen before the 1999 technology bubble. So the big question is this AI boom just beginning, or are we heading toward another technology bubble? Let us know your thoughts in the comment section. Now let's move to commodities. US WTI crude oil is currently trading around $83 to $85 per barrel, while Brent crude is trading near $92 to $94 per barrel. Yesterday, Indian crude oil futures ended with nearly 1% gains, while natural gas futures closed around 2.7% higher. In the precious metals segment, Indian gold futures declined by 1.08%, while silver futures fell nearly 2.3%. One of the reasons behind the weakness in precious metals is the sharp rise in global borrowing costs. Higher bond yields increase the opportunity cost of holding non-yielding assets, such as gold and silver. Bullion also faced short-term selling pressure as US Treasury yields moved higher and the Bloomberg Dollar Spot Index rebounded. Meanwhile, crude oil prices remain elevated because of the continuing US-Iran standoff over the Strait of Hormuz. This is keeping inflation concerns alive across global markets. However, despite the short-term pullback, long-term institutional demand and concerns over sovereign debt continue to provide structural support for gold. Growing concerns around government debt, AI-driven corporate borrowing, and fiscal sustainability are also encouraging investors to maintain long-term safe haven allocations towards bullion. Gold's broader baseline above the $4,000 level continues to be supported by persistent central bank purchases, particularly from China. A Bank of America fund manager survey also showed that the percentage of institutional investors who consider gold to be undervalued has reached its highest level since March 2023. So, while gold and silver are facing short-term pressure from higher yields and a stronger dollar, the longer-term bullish case for gold remains intact. Now, traders are closely watching the release of the Federal Reserve's July meeting minutes. Markets will also be watching comments from Fed officials at the annual Jackson Hole Symposium later this month. These updates could provide important clues about the future path of US interest rates and monetary policy. And any major shift in expectations could have a direct impact on global equities, the dollar, crude oil, gold, and emerging markets like India. Now, let's check the Gift Nifty. Yesterday, Gift Nifty closed around the 24,192 level, and today it opened at a similar level. So this is indicating a muted start for our Indian markets. Now, let's check the ADR data. Yesterday, only Wipro ADR closed in the neutral zone. Meanwhile, Infosys, Reliance Industries, ICICI Bank, Dr. Reddy's Laboratories, and HDFC Bank all closed in the positive zone. Remember, on Friday, these ADRs were mostly trading on the negative side. But yesterday, we saw a clear improvement, with most major Indian ADRs turning positive. So, this shift from negative to positive territory is indicating improving sentiment toward Indian markets. Now, moving to FII and DII data. Yesterday, FIIs were net buyers of 1,651 crores, while DIIs were also net buyers of 2,579 crores. This is another positive signal for the Indian market. With both foreign and domestic institutional investors turning net buyers, institutional activity is currently supporting positive market sentiment. Now, let's check the economic calendar. Yesterday, there were no major economic events scheduled, but today is much more important. We have UK and European CPI inflation data, followed by US crude oil inventories. And the most important event to watch tonight is the US FOMC meeting update. This could become a key trigger for global markets, especially because any change in the US Federal Reserve's tone regarding inflation, interest rates, or future policy could impact equities, bonds, currencies, and commodities. So, if you are a beginner, please be careful with overnight positions, especially ahead of major global events. Moving to tomorrow, we have US Philadelphia Fed manufacturing data and US initial jobless claims data. Now, coming to the geopolitical updates. The situation between the United States and Iran remains highly uncertain. Washington has officially denied that ongoing negotiations with Tehran are taking place, following the collapse of earlier understandings. Former US President Donald Trump stated that there are no talks or conversations taking place or scheduled with Iran. Trump also claimed that the Strait of Hormuz is open and operating, and said that water mines in the corridor have either been removed or detonated. At the same time, he confirmed that the US naval blockade remains in force around Iranian maritime access points. However, Tehran has strongly disputed Washington's position. Iran maintains that transit through the Strait of Hormuz remains conditional on US concessions. Iranian officials have stated that the strait will remain closed until key conditions are fulfilled, including the lifting of the US naval blockade, removal of oil sanctions, unfreezing of Iranian assets, and an end to military operations. So, we currently have two completely conflicting narratives from Washington and Tehran. And this uncertainty is extremely important for global markets because the Strait of Hormuz is a critical route for global energy supplies. Any escalation could put additional upward pressure on crude oil prices, shipping costs, and freight insurance. And on the other hand, the United Arab Emirates has issued a nationwide emergency phone alert over potential missile threats. The UAE Ministry of Defense confirmed that it had detected a missile threat directed toward the country. Authorities instructed residents and citizens to immediately seek shelter in a safe location. The warning was lifted shortly after the immediate threat was tracked and addressed. This comes amid renewed tensions involving commercial shipping and energy assets in the Gulf region. The UAE is a major commercial, aviation, and oil export hub. Therefore, any direct missile or drone escalation in the region could increase concerns around global crude supplies, shipping routes, and freight insurance costs. For the markets, the biggest factor to watch remains whether these tensions escalate further or move toward de-escalation. Now, let's check the important company updates announced after yesterday's market close. First, city gas distribution companies such as IGL, MGL, and Gujarat Gas are in sharp focus today. The central government has approved the APM/NAPM incentive scheme to accelerate the shift from LPG cylinders to domestic piped natural gas or PNG. The scheme will take effect from September 1, 2026 and will be implemented in two 6-month tranches. Under the scheme, eligible city gas distribution companies will receive an additional 200 SCM of lower-priced domestic APM gas for every incremental billed domestic PNG connection above the geographical area threshold. This could significantly reduce the cost of supplying domestic PNG. The government estimates that these savings could potentially reduce the payback period for domestic PNG infrastructure from around 10 years to just 3 years. India currently has around 1.74 crore domestic PNG connections. So, the scheme could encourage gas companies to convert more idle connections into active, revenue-generating connections. The government is also encouraging states to standardize and reduce local VAT on natural gas to 5%. Overall, this is a positive development for the city gas distribution sector. Next, 4 private sector lenders, Kotak Mahindra Bank, Yes Bank, IDFC First Bank, and Federal Bank are accelerating offshore bond issuances. Together, they are looking to raise around $1.85 billion or approximately 15,000 crore. The rush comes ahead of the RBI's decision to close its special foreign exchange swap facility for NRI deposits on August 31. Indian lenders have already raised around $6.3 billion through overseas debt since the RBI introduced the swap scheme on June 5. Earlier, ICICI Bank raised $750 million while Axis Bank raised $300 $300 million through overseas debt markets. Kotak Mahindra Bank is targeting pricing around 108 basis points above US Treasuries, while Yes Bank is preparing a 3-year dollar bond issue. Meanwhile, Federal Bank and IDFC First Bank are also exploring international fixed income investors. So the final week of August could remain active for Indian banks in the international debt market. And specifically for Kotak Mahindra Bank, the bank has successfully finalized its international borrowing terms. Kotak Mahindra Bank will issue senior unsecured notes worth $650 million or more than 5,400 crore rupees under its $1 billion EMTN program. The notes will carry a fixed interest rate of 5.478% per annum, payable semi-annually. The maturity period is 5 years with final redemption scheduled for August 24, 2031. The notes are expected to carry an investment-grade BBB rating from S&P Global Ratings. The proceeds will be used to diversify the bank's funding sources and support general corporate purposes. Overall, this provides Kotak Bank with an additional source of long-term foreign currency funding. Next, Swiggy. Swiggy has successfully secured shareholder approval for changes to its Articles of Association. At the August 18 AGM, the special resolution received 93.97% votes in favor, comfortably crossing the required 75% threshold. A separate resolution to cap aggregate foreign ownership at 49.5% on a fully diluted basis received an overwhelming 99.9996% approval. These changes are aimed at establishing Swiggy as an Indian-owned and controlled entity under India's foreign exchange regulations. And this could be particularly important for Instamart. Currently, Instamart operates as a marketplace for third-party sellers. After achieving the required Indian ownership and control status, Swiggy could gain greater flexibility to directly purchase, own, and sell inventory in selected categories. This could help improve sourcing, product availability, margins, fill rates, and fill rates. The transition is expected to take around 2 to 4 quarters. So Swiggy's progress toward an inventory-led quick commerce model will be an important development to track. Next, ONGC. ONGC has commissioned gas processing and evacuation facilities at Khoraghat GGS-1 in Assam's Golaghat district. The facility connects associated gas from the upper Assam shelf to the northeast gas grid. This infrastructure could unlock nearly 1 lakh SCM of gas per day from ONGC's Jorhat asset. The project complements the recently commissioned Dergaon-Dimapur pipeline. ONGC is also developing additional infrastructure at Janta Pathar and Kasomari Gaon to connect more producing fields. The development is important because increased domestic gas supply can support city gas distribution, transportation, power generation, and industrial demand across the northeast. It also helps reduce gas flaring and improves utilization of upstream assets. Next, HEG Limited. The NCLT Indore bench has approved the composite scheme of arrangement involving HEG Limited, HEG Graphite Limited, and Bhilwara Energy Limited. Under the scheme, the entire graphite business, including carbon products, will be demerged from HEG Limited into HEG Graphite Limited. Shareholders of HEG Limited will receive one fully paid up equity share of HEG Graphite Limited for every 1 share held. HEG Graphite Limited will take steps to complete its listing on the BSE and NSE within 60 days of receiving the certified NCLT order. Meanwhile, Bhilwara Energy Limited will be amalgamated into the parent company. Following the restructuring, the parent company will be renamed HEG Greentech Limited, while the pure-play graphite entity will retain the name HEG Limited. The restructuring is aimed at creating a pure-play graphite business while separately housing the group's green energy assets. Next, RailTel has received a significant enterprise cloud order from the Employees Provident Fund Organization or EPFO. The total work order is worth 166.80 crore rupees. The order was received on August 17, 2026 and involves a 1-year extension of RailTel's Infrastructure as a Service or IaaS work order. The project is scheduled to be completed by February 9, 2027. This contract further expands RailTel's cloud and data hosting presence across important public sector institutions. It also supports RailTel's broader transition toward cloud infrastructure, managed IT services, and higher value digital solutions alongside its traditional railway telecom business. Next, Exide Industries. Exide Industries has invested approximately 200 crore rupees into its wholly owned subsidiary, Exide Energy Solutions Limited, through a rights issue. EESL allotted around 5.71 crore equity shares at 10 rupees face value plus a 25 rupees premium per share. With this latest investment, Exide's total equity investment in EESL has reached around 5,102 crore rupees. Importantly, Exide continues to maintain 100% ownership of EESL. The capital infusion is being used to develop develop EESL's greenfield multi-gigawatt lithium-ion cell manufacturing facility in Bengaluru. The facility is designed to produce cylindrical, pouch, and prismatic battery cells, along with battery modules and packs. These batteries are expected to serve electric two-wheelers, four-wheelers, commercial vehicles, and stationary energy storage applications. So, Exide's continued investment highlights its long-term focus on India's growing EV and energy storage ecosystem. Finally, there were no major company quarterly results announced after the market close yesterday or scheduled for today that we need to highlight. So that's all for today's pre-market report. If you found this video helpful, don't forget to like, share, and subscribe to Stock Market Meridian. And I'll see you again this evening with today's post-market report. Thank you for watching. Signing off, Jai Hind.